What's up, Homefound homies? It's Michael Miller here again with your April market update. We're going to talk about three things as always. We're going to talk about rates. Hasn't been great news with rates. The Fed's got some not great numbers for inflation. We were floating at about 3%. We saw it tick up just about 0.5%. So seeing those inflation numbers not coming down has encouraged the Feds to, one, not decrease rates, and then the investors to keep their margins kind of high. I always like to look at the CME FedWatch tool to kind of see what predictions look like for the rest of the year. I'd mentioned before, I hope we get one rate drop this year. I don't know if it's going to happen, but if it is, there is a potential here on the graph. We've got about a 50% chance that in July, we may see our first rate cut. Interestingly enough, that actually isn't putting too much pressure on the market right now. We are still seeing pendings stay steady. Week over week, we saw pendings increase at the beginning of the year, and now each week they're staying steady right in the mid 1200s. And then we're also seeing more active inventory hit the market. So it's really nice to see in April more inventory on the market that we have seen all year. So that means more options for buyers, maybe a little less competition out there for them. And then lastly, I'd really like to take a look at an economic piece to the puzzle. And we're going to talk about rents, because a lot of people with the high interest rates are avoiding a mortgage to stay in a rental longer in order to what they consider save money. So we have the millennial generation, which is the largest generation to date about to enter into home ownership, and we don't have enough new construction homes for them. On top of that, we are also seeing builders building new construction homes and then making them rentals. So instead of actually selling these off, they're keeping them in their portfolio and renting them out. But conversely, what we're also seeing here is that the CPI index shows that rents are still kind of steadily going up. But when you look at real market data, it's that third graph right there that shows that decrease in rent about 1%. That's real market data. The CPI data lags a little bit. Real market data is showing that rents are coming down a little bit. So if you live in the Boise area, you've seen all the apartment complexes that are getting developed. There is someward downward pricing coming for rents. So that's good news, which will also be good news for inflation, which maybe will be good news for rates as well. Really, it always boils down to opportunity. If you're a buyer out there, we're seeing more options on the market. So if you can afford to buy a home right now, if interest rates were to come down, potentially we could see prices come up over the next 5 years. So if you can afford it, just look for the right home. If it's not out there, don't buy. And if it is, maybe we can find a good deal for you. More options on the market right now. With sellers, now that you've got more competition on the market, a good way to potentially maybe increase viewers of buyers for you would be to maybe offer some concessions, rate buy downs, things like that, maybe edge you out above the competition. As always, if you have any questions, reach out. This is Michael Miller with HomeFound.